What's up, you guys? It's Zach and I'm back with another video. Today I'm going to be discussing where to invest your money. Now, there's squirrels that run around, and bear with me, this example has to relate with the video. They run around with nuts and they just lose them. They toss them everywhere, and guess what happens? Trees grow, but they don't know where they put their nuts and what tree grew where. The point of this video is for you not to be an average squirrel. I want to show you where to put your nuts so you can come back and find that golden tree. I'm going to show you where to invest your money. So the first place you want to invest is into any bad debt that you have. Now, bad debt is something like credit card debt or something that you use to borrow money to buy a new flat screen TV, whatever you want, right? Credit card debt is usually above 20%, and that's extremely horrible. I recommend paying that off as fast as possible. Good debt is when you borrow money to buy something like a house, which is an asset and produces money for you. And it's cheaper. So if you get a loan from the bank at 4% interest rate, but you get that same money that you would have used to buy the house and put it in the stock market, you're making 8%. So there's a 4% difference that you keep. So for every $100 you throw away into the stock market, you're getting $8 back. And every $100 you grab from the bank, you're paying $4 on interest. So that $4 difference is what goes to you. And that's why it's called cheap money. So eliminate bad debt, and it's okay to have good debt, but we'll get into good debt later in the video. Okay, so that's the first place to invest your money. Eliminate any bad debt. The second place to invest your money is in a CD, and no, not an actual physical CD, or an online savings account. An online savings account is a bank account that is online. There's no brick and mortar locations. There may be one headquarters, but most of it is online. And with these banks, you get a much higher interest rate on your money than you would at a regular brick and mortar. For example, if you put your money in like Bank of America's savings account, you'll get a 0.03% on it. So for every $100 you have in there, you get 3 pennies. But for every $100 you put into an online savings account, such as ally.com, you get $1.75. That's almost 60 times more money you're being paid to leave your money in the bank. Now, a certificate of deposit is something where if you have an extra few $1,000s you don't know what to do with and you don't need it for another year or two, you give it to the bank and they certify that they'll pay you back that money with a certain interest rate, and it's generally a higher interest rate, like 3%, depending on which bank you look at. So now we know you make a lot more by paying off your debt first and foremost, and then secondly, switching over your money from a regular bank account to an online savings account where you'll make 60 times more money than you would at a regular account. So now after you have at least 6 months of living expenses in your savings account, now we can move on to the third place of where to invest.
PM, the market had dropped 508 points. The biggest plummet since the crash of '29.
I know your family.
So the third place to invest your money would be the stock market. Now, the stock market, I use Robinhood, which is an app you can download or a website you can go to, and it's commission-free trading, which basically means you don't have to pay a fee every time you buy or sell a share of stock. So for those of you who don't know anything about the stock market, a share of stock is like a piece of a company. So McDonald's is a big company that's public, and public companies have shares, and each share is a small, tiny fraction of a percent ownership of the company. So if I wanted to own a piece of McDonald's and I believe they're gonna keep growing, I'll buy that tiny piece of the pie, hoping that it appreciates in value over time. So McDonald's is worth, market cap right now is around 140 billion, right? I'm expecting that market cap to go up. I expect McDonald's to be worth 200 billion in the future. So for that reason, I'm gonna buy a share of the company. Now, as the stock price goes up over time, that's where the investment is making you money. Also, if you're holding the stock and it pays a dividend, every quarter, typically, you are going to receive money from the company. For example, I own shares of Coca-Cola and McDonald's, and every few months, I get a check in the mail from Coca-Cola with a certain amount of money based on the shares that I have. Same thing with McDonald's. So now that you know you can own shares of a public company, you can learn how to research and find out what companies you believe are essentially undervalued for what they are and buy them. Because the price of a stock is all determined by the supply and demand of the company. So if you look at the market cap of a stock, which is the number of shares outstanding multiplied by the price per share of stock, that makes the market cap. So if you guys want to learn more about stocks or want a more detailed video about it, Leave a comment down below. I may make a future video on this. Just let me know what you guys want. So the fourth place would be real estate. Real estate is a great option because earlier how we were talking about good debt and bad debt, real estate is a form of good debt. Let me explain and tell you exactly how. When you buy a house, you're gonna take on debt to own that house. But this debt is good because the house is an appreciating asset, or the apartment or the triplex, whatever piece of real estate you're investing in. You are hoping that the value is gonna go up over time, and you are borrowing money at an interest rate lower than what the stock market would pay. If you borrow $100,000 at 4%, but you invest $100,000 in the stock market at 8%, you're making 8%, you're only paying 4%, so you keep that difference. That's why I think if you're gonna buy a house all out in cash, that's not really the right move. I mean, you might as well just buy stock, because the point of real estate is to leverage, not be afraid of debt. There's good debt that you shouldn't be afraid of, and there's bad debt that you should fear and run away from. You see credit cards, buying a new car, run away from that. Be scared. Don't do it. Don't do it. It's not good for you. But you see a house that you want to buy, and you did the math and you did your research, and you know, okay, this is a good area. This is most likely going to appreciate. This is an investment. I got a loan for a good interest rate. All right, that's good debt you shouldn't be afraid of. You're leveraging yourself. You're gonna need to use leverage, especially if you wanna become rich. Leverage is very important. Don't be afraid of debt. So just educate yourself on the difference between good debt and bad debt. All right, I hope that's clear. The reason why real estate is a great place is because there's only so much land on planet Earth, but there's so many of us multiplying. A baby is born like, how many babies were born while you're watching this video? A ton of babies were born, and there's more coming out. But how much land was made? None. The land stays the same. We only have so much land on Earth. So think about it. Land is gonna go up over time. Hence why I would say 90% of the wealthiest people on Earth used real estate as part of a way to either get their wealth or maintain their wealth. So as the population increases, the value of real estate is gonna increase. We only have so much land. In another video, we can go deeper into real estate if that's what you want to learn about. So take advantage of the real estate opportunity, leverage money using debt that's cheaper than what you would make at the stock market, and take advantage of the fact that the population's only growing and we only have so much land. So to wrap up this video with a fifth and final place to invest your money, which is the most important, is yourself. Invest in you, because you can return much more than 8% in the stock market or 20% in a lucky trade. You are infinite. Invest in your mind. What do I mean by investing in yourself? Start reading books about finance, about self-improvement, about anything that you want to fix in your life, any problem you have. Invest in these books. These are like mentors. These guys that wrote these books, even if they're dead, like I can still learn from Benjamin Franklin if I wanted. Here's some books that I recommend that you read if you haven't already. Rich Dad, Poor Dad, Think and Grow Rich, How to Win Friends and Influence People by Dale Carnegie, and many other books. I'll probably leave some in the description for you below. So after investing in books and knowledge, you can also pick up skills. You can take a course. If you like to train people to work out, you can become a certified personal trainer, spend a couple hours, get the certificate or whatever, and then start training people on how to work out. You can, if you like to cook, invest in a cookbook, create a cookbook, invest in someone to help you make a cookbook that you could sell, and so on and so forth. And basically invest in yourself. Whatever that you like to do, whatever you feel are your strengths, focus on that. So there you go. Don't be the average squirrel that loses its nuts everywhere and just plants random trees all over the world.
Hello there, I am a fat little squirrel sitting on your porch. Thank you very much for giving me these delicious walnuts. I like them very much. You are a nice person. I will be sure to come back tomorrow to get some more walnuts. You are my favorite person in the neighborhood. I like you.
Get your nuts, put them in a specific area, and grow a beautiful golden tree. So, hope you enjoyed this video. If you have any questions at all, leave them in the comments below. Share this with someone who doesn't know what to do with their nuts, a fellow squirrel that's lost out there, and subscribe for more videos.